What's up everyone, Tom here with another video. Today we'll be doing our weekly analysis together of the stock market, where we cover the latest news for the week ahead, as well as our technical analysis levels for the S&P 500, Nasdaq, gold, and the US dollar index. We'll be using our top-down technical analysis approach together today, where we go from the monthly to the weekly to the daily to try to find the best key support and resistance lines in the markets right now. This one should be good. Stay tuned. So I thought the best place to start today would be to discuss something that I thought we wouldn't be seeing right now, and that is that Buffett has invested in the metal he once mocked. That's right. For many people out there, we'll be feeling very justified right now, as I know a lot of viewers have been buying gold and silver recently. So Warren Buffett has just purchased some shares of Barrick, and this is the world's second largest gold miner. Obviously, when Buffett makes a move, things go up, and we did see that in late filing hours. So after hours, basically after this was disclosed, Gold Corp moved up 8%. So what does this mean for gold in general? We know people follow Buffett and he is highly respected in his investment decisions. And why not? He's made a lot of money over the years. So from a gold perspective, it's key to be looking for the monthly down. And that's just to get an understanding of the current move and also to understand whether these moves are unjustified or whether they have happened before. So as we do know, this has been in a very big bull run recently, and it has been in big bull runs before. Obviously the GFC down in September all the way to 2011 was a big bullish move for gold. It then had a breather and it looks like it's on again, and obviously Buffett sees something in gold for the long term with everything that the Fed's done and everything in terms of fiscal stimulus around the world. So I've got this monthly up, and you will see I've got a horizontal line at kind of this 2036, and I've also got a horizontal line at the 1800. So the 1800 is based on this monthly. And why are we looking at this level? Well, we're looking at this level because it was previously resistance, which could act as support. And now that we're in a bit of a blow-off phase for gold, as in gold moved up a little bit too fast for itself, and it's going to have kind of like a top in for now and probably a little bit of sideways action as it gets ready for its next move, there is a possibility that it comes back down to 1800. Why is that significant? Well, we're so far away right now from the 20 moving average on the monthly. This means that it hasn't really caught up with it. And generally speaking, during big bull runs, the markets will move away from the 20 and not necessarily be touching it. But the 1800 does make sense. And the reason it makes so much sense is that this market likes to go to psychological levels. It likes the hundreds and it likes the 50s. So the 1800 level could act as very good support. And when we go down through the weekly, we'll notice why again. Look at this 20 moving average. Long-time viewers would know we love the 20 moving average. It is in fact my favorite moving average, and this is the exponential one. If the market was to sell off quickly this week, it would hit the 20 moving average. And we know that during bull runs, gold likes to hug these kind of moving averages. Let's just quickly scroll over here and have a look at the last bull run. Notice that gold came down several times to the weekly 20 moving average during its big bull run up. What has it not done recently? It has not been able to hug the 20 moving average because its move was too aggressive and too fast. So the 1800 definitely has me interested. The reason the 2036 has me interested is that was the last body close that we had on the weekly. And I drew that up because I think that body closes mean the most in the market because it's where the price really truly ended, and it's where that war between the bulls and the bears ended during that candle period. So always be paying attention closely to those body zones. What can we see on the daily? Well, it rejected off, of course, that daily 50 exponential moving average and moved up. If we go down to the 4 hour though, I think that's where things get a little bit more interesting. And why do they get more interesting? Well, it's got to do with price action. We had a trough, we had a peak, we had a higher trough, and we had a higher peak. We've spoken about how we think that gold could potentially even move upwards to $2,000 before it even starts to sell off again. And why is this? Well, the market likes to, during blow-offs, to move aggressively each way. So this 1940 zone has me interested this week, and it's definitely a key area I'd be looking at. The main reason why is we have not seen a body close really anywhere above it or below it other than when it closed through. Why is that significant? It means that the market likes to buy and sell off this level, and it's a key area in the market. So if you ever see this, it becomes that key area, and it's always important to have that on your charts. Another thing I like is that if we look at the fib of the entire move, so let's take the Fibonacci of the entire move right now together, we just pull it from there down to here, from the high to the low, we'll notice that the market has not come back to the 61.8 yet, but notice where the 61.8 fib is. It's at the $2,000 mark. Usually during blow-offs, if we are to see the market come back down, it will go down, quickly come back up, go to the 61.8 fib or the 78.6 fib, so somewhere in this zone, and usually that's where it turns away again. And why does that happen? Well, it's the nature of an unpredictable but very heavily traded market. So it's that nature of the blow-off. That's usually what happens. So let's now go on to the market stuff together. What are we seeing on the volatility index, or VIX? I'm going to just cover this really quickly. We've got the 20, which is the most important zone for the VIX, and we've seen the market test it and then pull back up. So volatility came in when it hit the 20. Will that happen this week again? Well, it's interesting that the VIX is hitting the 20 at the same time that the stock market is about to hit all-time highs, as in the S&P 500. So the VIX could be interesting to watch from the 20 zone, and I'd have it on your charts this week. I think it's always worthwhile doing so. What about the US dollar index? Well, like we covered last week, it's still stuck in a range between kind of that 93.80 to 94 zone and that 92.46. On the daily is probably one of the most interesting kind of areas, as we've got that 20 moving average. If it comes back up, it could find resistance in a very nice sell-off. And if it gets above that zone, of course, it will act like a distribution range as in a channel, and it would move a very similar distance to the previous move. So let's take a look at that now together and see what it would look like. It would look like something like this. And I think the 4 hour shows us the best channeling range. Another thing with channels, if you're ever looking at them, always look for 2 touches to each side. So we've got 1, 2, and we've got our 1, 2. At this point, we can really say we're in a distribution range, and we should be looking at trades either within the range or if it breaks out of the range for the next move. So that's a good little tip that I think will help a lot of people out there. Also, remember to subscribe and of course hit that alert button if you want more tips and tricks that I think would help you in the markets. What about the actual stock market though? What's been happening over the last week? Well, I always like to go through the heat map with everyone together. Why is that? Well, I think this helps us to get a bit of an idea of where the money flow is going. Where was the money flow going last week? Well, it certainly wasn't in the technology area as much as it used to be. So it wasn't in the big FANG stocks except for Apple, and Google, Facebook, and Amazon were actually pretty flat to down for the week. So the big leaders weren't leading. What was leading? Well, home improvement, industrials, aerospace, the banks, insurances, and consumer defensive all did quite well. What's more interesting though, that real estate and utilities did very poorly near the end of last week. So they're two definitely to watch this week to see what continuously happens on those particular sectors. Let's now talk about the S&P 500, but firstly, I'll just bring up this monthly pivot. So the monthly R2 pivot often holds the stock market down as it's a good resistance level. And notice where this monthly R2 pivot is. It's at 33.96. That's just below the 3400 psychological zone. And this is going to act as resistance as it often does throughout the market. And it's very infrequently that the market likes to move above the R2 and certainly not the R3, which is sitting at 35.12. So it doesn't seem likely that these levels are broken, but that's just the way that pivots work. Notice over here, just before the crash in February, we had the monthly R2 pivot reached, barely breached it, and then sold off. So the monthly R2 pivots and R3 pivots, and of course S2 and S3 certainly do matter, and they're worth paying attention to this week. So what about the S&P 500 on the monthly using our top-down approach? Well, I think the monthly isn't showing us too much other than we've had a miraculous recovery in the stock markets. Where I think it gets more interesting is the weekly. So let's zoom in on the weekly here and talk about the key levels. Well, firstly, the weekly is showing us that we have a clear level of resistance up here around this 33.80, and that we also have a clear level or dip buying level around this 3200. Why are these two zones important? Well, the previous body closes that were respected before are at the 3200. We also know the 3200 is a psychological level, and if the market was to sell off and move back down here, what would be intersecting with it at a similar time? The 20 exponential moving average. We would expect as the market sells off, the moving average, which is of course a lagging indicator, would be moving up, and that they may intersect around 3200. So for dip buyers, 3200 could be a zone where you're going to find a lot of support. And I just say the market will find a lot of support at this zone. The other thing that's interesting about this 3380 kind of zone or 3400 zone is not only is it all-time highs, but remember we're hitting a psychological 100 zone. We know that the S&P 500 loves 50s and loves hundreds, but in particular, it loves those hundreds. 3000 was a key battle zone. 3100 was a bit of a battle zone. 3200 certainly was a battle zone. So it's a common theme within this index or indice that we do see those key psychological levels respected. So when we bring this down to a daily, what's been happening? Well, the daily's been showing us that the 20 moving average on the daily has been holding. We've got 2 touches down here, a third touch, and if the market was to come down this week and go down to the 20 moving average, what would that be? It would be on the 3300 level. So if it's sold off at the start of the week, came back down here, there will be buying support most likely at the 3300 20 exponential moving average. On top of that, if it came down and it did find buying support and then went back up and found resistance up here, what might be happening? Well, we may have 2 resistance points, and those 2 resistance points then could come down. And if it got past that 3300 again, what would that be creating? And I know a lot of people out there probably saying double top, and you'd be absolutely correct. A double top would be forming, and this is the kind of chess that you want to play with the market. You want to think of scenarios and whether they make sense. Well, if it did come back down, what would be happening? Well, it would have got through the 20 moving average, and of course the move of the double top would be predicting a very similar move all the way down. So that's like 80 to 100 points. If that was the case, we could be going back down to that 3200, 3220. So that's something that may happen, and it's definitely worthwhile considering. Another thing is it worth buying here? So a few people have said, would I buy the stock market here? And this is, of course, just my opinion, and you make your own decisions. But it's becoming very important to understand that we are at almost all-time highs. Would you buy at an all-time high, as in right on the resistance? Or would you prefer to buy when the market goes through, confirms it wants to move to a new level, as in a close of a significant candle above, and then comes back down and tests the previous resistance as support? Price action based traders, you should be always thinking, well, this would be the better buy. Wait and see for the confirmation to happen and then look to get into it. That's the smarter money and the smarter kind of choice generally to do. The other thing is it may coil here. So as we said with that double top idea, it might just distribute here for a little while, and then longer it coils, you should be cheering. I'm cheering the longer it sits here. And the reason why is if it does break through after being and coiling for a long period of time, what is that telling us? Well, the market has had time to think about this level, and then it has decided to either close above or below. When that happens, the move is more explosive. And the more explosive a move is, the more opportunity for you as an investor or trader. And that's something that we love on this trading channel. We obviously love as much opportunity as possible. So this could be very interesting kind of week for the S&P 500. It could be decision time for sure. We've seen a little bit of resistance being tested. We know we've got that monthly R2 pivot above, and we know that the daily 20 moving average is significant. So our top-down analysis kind of is showing us that for the S&P 500. Where I think things become even more interesting though is also the Nasdaq, because the Nasdaq stocks have been leading really the entire index. We've seen big moves on the Nasdaq, and we are very far away now from the monthly moving average, but more importantly, the weekly moving average. Look at this weekly moving average. That's still down at 10,000, and we're up here at 11,050. So at some point, it will want to come back down. And how do we know this? Because look at the previous big moves in terms of bull runs. Look at any bull run on the Nasdaq throughout time. They always want to come down to the weekly 20 moving average throughout the bull run. What has this one not done? It has not touched the 20 moving average. We know that it's in at least a partial semi-bubble for now, and it must have a relaxation mode and just do a bit of woosah and a bit of chill before it comes back down. It has to have a chill at some point. So if you're feeling the FOMO right now, and we don't feel the FOMO on this channel, of course, we would be looking at waiting for that 20 moving average. It may just hover here for a month and do nothing. It may do nothing before the election. Who knows? But the perspective is we're very far away from that point. I just wanted to bring that up and really hammer that home. Another thing is we're just above the 11,000. So we spoke about how on the weekly there was that 500 point range, that channel range, and that could go to 11,500. That's still really the move and still the play at this point. For any kind of shorter term trade or anyone that's just been buying and dollar cost averaging in, it's really just been about the daily 20. The daily 20 on aggressive runs is always a great moving average to have on there. And every single time it's come back to this 20, it's been buying off it. The only thing that's happened recently is it's slowed down a little. So we'll notice that the stock market in terms of the Nasdaq, usually when it was breaking long, it was aggressively moving up. This time it's kind of been moving up, but then it's been selling off very quickly. So we are in a bit of a big giant range here where the market is not so sure on the pricing or repricing as it once was. That's for sure. And this week remains bullish for now, but we're tentatively looking at, of course, any closes underneath key zones. So a close underneath the 11,000, getting under this 20 moving average, they're the kind of significant things that we're looking at this week, or even possibly under 10,500. If that happens, very good chance we're going back down to 10,000. That's the kind of way that technicals would work here. We'd be breaking several key levels at that zone. Another one that's worthwhile watching is Apple this week. Obviously, Apple is really driving sentiment right now. I think this stock's gone too fast, too quick, but it's not for me to call that. It's really just the technicals showing very big bullish move up, huge amount of retail traders in there. It may go to 500 or just before 500 before pulling back. But the more this stock moves up, the more you should be worried. If this stock gets to 500 within this week, I would be very, very worried for the stock market, because this is a big stock. We all know it's one of the biggest, depending on whether Microsoft or Apple are the biggest on the day. And particularly this stock here, I think will drive sentiment. There's a huge amount of retail FOMO here from everybody. And I know Apple's a great stock. I believe in the company, but I would be having this one on your charts and always setting alerts for all levels. So we're very far away from that daily 20 right now, and we moved up way too aggressively, at least in my opinion. For the major economic reports and news for the week ahead, in terms of things that we're looking at, these are the main ones. FOMC meetings on Wednesday, obviously the Philly Fed Index and the continuous jobless claims on Thursday. Little bit of US news, but really the story remains tensions between China and the US, the election, and whatever else Wall Street wants to bring up. Every single piece of bad news is being ignored at the moment. We all know that on this channel. We all know that no one seems to care about anything. It's all about the Fed and fiscal stimulus. But eventually, it all kind of brings it up. And remember, the one thing with stock markets is that you don't see usually the problem until somebody just goes, oh, it's the mistake, or Wall Street says that's the thing that we want to be looking at and we're going to crash the markets. And then it all becomes clear. It's usually an excuse to get rid of retail traders and to steal money from some other person, as in the markets, someone makes and someone loses. Hopefully this week you are not a loser, and of course you make some money, and I wish everybody the best. If you haven't already, make sure to give this video a thumbs up, subscribe, hit the alert button, and of course comment down below with the thing that you're looking at most this week. Is it gold? Is it silver? Is it an index of some kind? Let me know in the comments down below. Happy trading, everybody. See you later on this week. Bye for now.